All right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And today is Friday, January 20th, and stocks closed lower yesterday. And the Dow and S&P have their third day of losses. The Dow is even now negative for the year. But then yesterday, Netflix reported earnings. So what's happening in the markets today? And more importantly, how are we trading the markets? By the way, if this is your first time here, I'm Markus Heitkoetter. This is my head coach, Mark, and we are real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And boy, after 3 days of losses, the Dow here hanging in here at support.
Yeah, not too bad, Marcus. We see a positive session so far, helped out by some optimism over earnings. But like you said, Marcus, I mean, 3 consecutive losing days for the S&P. Also, the Dow negative for the year, but holding up right now.
Yeah, and the S&P, we have talked about the technical levels. It seems that the 3,900 level is holding right now. So can we go back into this range between 3,900 and 4,100? So the next attack would be the 4,000 level, as well as the 200-day moving average. I mean, that's what we need to see. But still, for the week, I mean, right now, for the week, definitely negative. So after a good start in the year, seems that what are we right now? Week number 3 turns out to be a losing week in the markets.
It's amazing to think we're almost done with January.
Jeez,
I don't want to get ahead of
unbelievable,
myself, but
unbelievable. So let's take a look at what's moving the market. So this morning we had existing home sales coming out as an economic report, and existing home sales also fell now for the 11th consecutive months in December, slowest pace since November 2010.
interesting, but I think that today the markets were really more focused on some notable earnings. But hey, this is a trend that can't be overlooked.
Well, plus it's actually we talked about it this week. I mean, good news is bad news, and bad news is good news, or is bad news now bad news? We know that in the latest CPI report, we saw that housing is still playing a major role in inflation. So, I mean, here housing market going into a slump is probably not a bad thing for inflation.
Sure, sure. And today is the last day we will hear from Fed officials because they begin their blackout period that lasts for 10 days before their meeting. So, inflation being an issue and some comments from the Fed. Now we get to wait for the 2 day policy statement that wraps up in February.
Yeah, and to be honest, I mean, they have been super active this week, but we didn't hear anything new. We know that there's some Fed members who just say, no, we need to stay the course. Others say, well, we might consider easing it a little bit. And if you look at the probabilities of what's happening in the February meeting here, I mean, right now, 97% probability of a 25 basis point hike. And also, in terms of when will the Fed stop raising interest rates, nothing has changed there. So, I mean, the whole week, even though we hear from another Fed member today, who is it today? Harker and Waller are speaking. It doesn't seem that they provided any meaningful insights where traders say, oh, now we know what they're thinking.
Agreed. Agreed. I saw some of the comments from Williams yesterday, and he basically said inflation is still high. There's still work to do to bring it down to their 2% goal.
Yeah. So, I
I
mean,
mean,
again,
yeah, sure.
not much direction here. So this week we had a whole round of earnings. I mean, we were still kicking into higher gear next week, but everybody was waiting for Netflix. Netflix reported earnings yesterday, and Netflix that crashed a few times because of lower subscribers. is actually having a pretty decent day here. I mean, earlier we were up higher, but still up almost 7% right now.
Yeah, an impressive move. I mean, we've seen that Netflix has been a big mover around earnings, this time to the upside. They jumped up big after reporting, actually missing earnings expectations, but adding more subscribers than analysts were expecting. So that was big.
Yeah, and I think not a little bit more subscribers. I actually pulled it up. I mean, they added 7.66 million subscribers, and expected was 4.57. I mean, this is where they blew it out of the water, and this is where everybody said, "Oh, okay, yay, Netflix, let's do it."
Yep.
And then another company didn't report earnings, but finally, Google. Geez, we have been waiting for this. Like, okay, Google, are you laying off or not? And now they said this morning, yes, we are laying off people, same as Amazon and Salesforce and Microsoft. I mean, they are now joining. And we talked about it. I mean, Google was beating to its own drum because there was all this uncertainty. Okay, what are they gonna do? And this morning, finally, there's some certainty.
Yeah, they announced that they're laying off 12,000 employees. The company memo saying that they were hired for a different economic reality than the one we face today. And traders embracing this, right? So if you have a company that's in trouble, that's weak, that's laying off employees, probably not a good thing. But a strong, solid company laying off employees, that could be viewed as a positive. And Google getting a nice boost today, up 3.6% right now.
Yeah, pulling back a little bit, it was up as much as 5%. So we'll see what happens there. But yeah, they are now joining Amazon and Microsoft to combined lay off 28,000 people plus another 12,000. And this will be reflected in the unemployment data because yesterday, the unemployment data showed that the jobs market remains strong. But now, with 40,000 people just from these two companies. Then Goldman Sachs announced that they are laying off 3,200 people, Salesforce, Slack. I mean, everybody is announcing layoffs right now. And again, this is where, of course, it's horrible for everybody who is affected. And that's what the Fed wants. That's what they want to see. They want to see a softer labor market. And I think they're getting their wish right now.
Yeah. It'll be a interesting 2-day policy meeting. Inflation coming down, job market weakening. We'll see what they have to say.
Yeah. All right, let's take a look at our positions that we have going on here. And the first one is CTRA. And CTRA this morning marching higher. You sold the 26 calls. What do you think? It's right now 25.61. Will it rally another 40 cents? Are you thinking about closing your calls? Are you thinking about rolling your calls? What is your plan there? I missed that. And yes, you can rub it in one more time.
So my plan when I'm selling calls is to close the trade at 90% up until the last day of expiration. And then on the last day of expiration, let it expire. Consider selling calls again next week. Or the possibility of rolling calls would also be an option. And this is something that I'm most likely to do on a Thursday or Friday. So at this point, I'm more inclined to let those 26 calls expire worthless. I don't think we're going to get above 26, but crazier things have happened. So I will monitor it today, and I'll also see what the premium will be for a possible roll.
Yeah. All right, then we have Google. Again, the Googles now finally breaking out. Not yet enough to sell calls, and we need to see where they end the day after the dust settles. Again, 13 more days till earnings, where we will probably see some more or get some more guidance of how they're also combating this Chat GPT AI that Microsoft is incorporating into many of their products after they made a 10 billion investment in this. And that's definitely something that could be a threat to Google.
Yeah, but I do like technically where we're at. We see that we've popped back into that upper range. We kind of had this 94, 95, 100 zone or range that Google traded in November and December. And we're right back into that range, opening at the lower part of that range, rallying up to $98 dollars a share. So getting back up there is a big positive I think we need to get up, above 100 to be selling calls, at least for me. And we also have earnings coming up. Looks like they're scheduled for February 2nd.
Yes, after the bell. All right, and then we have Nvidia, and Nvidia is trading right around my strike price. So I have an existing position in Nvidia with 1,100 shares, and I sold the 170 call. And we talked about it all week. What should I do with the call? And this is where I'm looking into rolling this call. And right now, I could get $3.29. And based on my position size, uh, oh, I need to put the price in there. So if I would get, let's say, $3.30 based on my position size, this would be $3,630 for rolling it. And I know that many of you viewers and also you, Mark, said, let it go, let it go. And 3,630 reasons for not letting it go.
I mean, right now, this is really an optimal situation for you. I really don't think you can go wrong. But where the stock's trading at is perfect. It's above 170. It's at 171. In a perfect world, towards the end of the day, if you're trading right at 170, that's when this Friday's expiration would just have a minimal value, and next Friday's expiration would have maximum value, being at the money. Um, it's a really tempting credit. I'd still be inclined to let this one go, but I do have to say that with the way the markets are moving right now, getting into new trades has been a little bit on the light side, not as many opportunities. So you could make a case to extend it a week.
Well, and this is where I was looking at PNC because that's a trade that that we entered on Wednesday, and I sold the 148. And so yesterday it was closing right at 148.02. This morning it dipped into, as low as 147.31. So there could have been a probability that I got assigned, and this is where I thought, okay, if I'm getting assigned in PNC, then I'll definitely let go on NVIDIA because I have been flying a rescue mission. So therefore, NVIDIA is taking up 2 positions in my portfolio, and I like to have up to 5 positions. So this 1, 2, 3, and 4, and 5. And this is where it would have been great to actually, free up some buying power here with NVIDIA. But now with PNC rallying today, it doesn't seem that I'm getting assigned there. So I still have an open position. That's why I am very, very inclined to roll NVIDIA for another week. But I mean, we have been talking about it, right? I mean, is this something that I will regret if NVIDIA pops lower to 140 again, right? And that's where you mentioned it yesterday. There's always the possibility of selling more puts at 140.
Yeah, and honestly, this is where, if it wasn't the larger position, I would definitely consider rolling and seeing if it can make a move up towards 180. Because it's the larger position, I would say let it go. Just time to move on. But I think you're gonna roll. I think by the end of the day, you're gonna say, "I did it."
Well, this is where, I mean, you guys need to stay tuned because I will definitely let you know on Monday. So absolutely make sure that you're tuning in for the next one, for the next episode. So, yeah, I mean, just overall looking at the markets today, the NASDAQ, the strongest NASDAQ, still up and away. Just because of what we talked about, Netflix, who is in the NASDAQ. And then also we have Google in the NASDAQ. So they are actually moving the NASDAQ higher here today and dragging other stocks up higher with it.
Can't complain.
Okay, absolutely not. So let's see. NVIDIA moving higher after hovering around 170, but today a lot of options are expiring, so we will see what happens there. Google, after initial push higher, pulling back, but right now making another attack to the upside. So we will see. It's definitely super interesting what's happening in the markets right now. And next week, since we have a quiet week when it comes to the Fed, let's just quickly see what other economic reports do we have actually next week. Um, I don't think that there's a lot moving the markets. So we have the flash services PMI on Tuesday. We have the advanced GDP on Thursday, and then core PCE on Friday. What do you think? Uh, Any of these reports moving the markets, or will the focus remain on earnings?
The focus will definitely be on earnings, but core PCE is a metric that the Fed definitely takes into consideration, and advanced GDP is significant as well. Sometimes more media focused, I think.
Yeah, for
A
sure.
buzz to talk about and go crazy about. But I think those are the two things to really keep an eye on the economic calendar, and then earnings, earnings, earnings.
That's exactly what we'll see here next week. Anyhow, so if you find this helpful and if you want to know what exactly is happening with my NVIDIA position, make sure that you like the video, tune in, and check out this video that I'll link to here in right here on the screen. This will give you some more help and insights of how we are trading these markets and why we are doing what we are doing. Anyhow, have a great weekend and tune in on Monday to learn more about NVIDIA.
Happy trading, everybody.